What's up, guys? Eric here, Mr. Fired Up Wealth. Want to bring you a quick video to here on this Monday, just some real talk for you. We've got the market, is doing its thing. And, the interesting thing is we actually had all-time highs for all the three major indexes last week, right? So for the Dow, for the S&P 500, for the NASDAQ. But, some investors, especially on the retail side, some of us are highly speculative in our investments, which there's nothing wrong with that. But I wanted to just talk about it and I just wanted to give you some real talk because I've been investing for 20 years and I've seen a lot, and maybe it'll help a few of you. Some of you might get upset or whatever, but just hear me out. This is just facts, and you can take the information for what you want, take it for what it's worth, right? For what you would like to use it for. Okay. So you look at the market. And first of all, if you've been following Fired Up Wealth for any amount of time at all, I have several different videos on how to build a growth portfolio. I've got one that shows you how to build a portfolio. I've got several videos that break down my portfolio. If you're in Discord, I talk about all the time about, having that diversity and having what I call a blueprint and a balanced portfolio. And I like to have a little bit of ETFs. I like some growth. I like some dividend growth investing, some DGI. A little bit more of that blue chip stuff. I like to have some cash, and spec is always 10% or less, unless you're really young and aggressive, maybe 20% max. But for the most part, I generally keep my portfolio around 10%. And I've said over and over, and this is not anything against SPACs, like I own SPACs. I have Open Door, I have IPOE, I've got DraftKings, I've got several SPACs. But those SPACs go in the spec bucket. If you are in our Discord, we have a channel, it's called SPACs and Specs. And I say anything that's a SPAC right now is a spec. The reason for it is simply you just don't have as much information about a company. And that's why they're out of favor for a couple reasons. So they're out of favor for a couple reasons. Number one, because of higher interest rates. And basically fear of interest rates is going to make the higher PE, the less quality names, so to speak. It's going to make those stocks generally go down. You're going to see large cap growth, which is my heaviest weight. And that my portfolio is up about 10% year to date. So I'm doing just fine. I'm not back to the all-time highs where we were when everything was going crazy back in February, because a lot of my speculative stocks got hit really hard. But I'm still up about 10% since the start of the year. And I feel really good with where I'm at. And I've been adding stocks that I'm still bullish on. Now, the stuff that I'm buying right now, most of it is 3 to 5 years. My goal right now, I've got a $1.5 million taxable brokerage account. I want that to be at least $3 million in the next 5 years. And I have conviction in the stocks that I own, and I have conviction in the stories, but I'm also very diversified. So I've got large cap growth. I've got some ETFs. I've got, smaller cap speculative growth. I've got spec. My speculative basket right now is actually less than 10%. I've got around 5% cash. If you look at my largest holdings, you've got things like Amazon, you got things like Microsoft. I even got AbbVie in my top 5, AbbVie, biotech, nice dividend. I've got Home Depot in there. I've got Costco. I've got a very rounded portfolio if you actually look. And again, there's some videos on the channel. You can go back and see what my portfolio has. There's been some changes since. And I'm considering making another video to kind of break down my portfolio, kind of where it's at now. But for today, I just want to talk through some past experiences. So you think of like a Planet 13. I bought this stock several years ago, 2017, 2018. I bought a bunch of cannabis stocks back then, and a lot of them got hammered. And it was a really nasty period for a long time where the stocks would go up and down, churn sideways. They got beat down for a while, but I had conviction, and they were in my spec bucket. And if you want to learn more about how I play the spec bucket, I've got videos in the channel, a couple different videos that show you how to do SPACs. In fact, just a couple videos ago, I did one called Bagger Stocks, and it talks about how to play that speculative portion of your portfolio. But anyway, you look at Planet 13, and it had a really rough, turbulent type time, but I always believed in the stock, held it long. It was not only did I have conviction in it, I also knew it was a longer term story. And I also had the allocation, hedged well. It wasn't like I had 20% of my portfolio in Planet 13. Another one, Square. I bought Square the first time back in 2017. I think it was like $30 or something, $35. And I'll show you up on the screen here. After I record the video, I'll put it up so you can see exactly what the numbers are. but it'll probably be over there. It's always backwards, so it'll be up over here. But Square is another one. I held it since 2017, and it was very turbulent, up and down, sideways. But I always had conviction in the stock, and of course the pandemic boosted a lot of those stocks. But I think most people would tell you that they're very bullish on Square long term, and it's come a long way from. I think my cost basis is around $50 a share. And, both of these are just examples. I've got, tons of different stocks that are up 100, 200, 300, 400, 500%, but it doesn't happen overnight. I've been investing for 20 years. I'm constantly managing my portfolio, buying and selling, and I buy and sell stuff all the time, but I'm generally a long-term investor. I do, very minimal swing trades and things like that. I'm not trying to basically get rich, quick. I've been investing for 20 years, slowly, organically, saving as much as I could, investing in quality companies the best I could, and growing that portfolio at a time from $0 to $1.5 million. And it wasn't an overnight story. It wasn't something where, it's the cool, flashy thing, of course, if I could tell you a story that I started investing last year and I was able to start with $5,000 and I day traded to $1.5 million. That's not my story, okay? That's not my story, and I don't try to pretend to be something I'm not. I'm a long-term investor. I think it should resonate with you because if you're watching this, you can do it too. Anybody can do it. You need a little time on your side. And of course, the bull market certainly helps. When you think of buying something, if you're in your 20s or even in your 30s, or whatever age you are. But if you've got time on your side and you're not looking to retire for 10, 20, 30 years, you can look back at Apple and a lot of the stocks and you could say at the time, it was a no-brainer. Why didn't I buy Amazon? Why didn't I buy it? It's always easy in hindsight to look back and say, why didn't I buy that stock? Why didn't I do this? Why didn't I do that? And of course, one of the investing rules for Fired Up Wealth is no coulda, shoulda, woulda, right? But I just wanted to make this quick video to kind of talk through and give you a little bit of confidence too. I mean, if you've got conviction in your story, here's the thing. Not every one of your stocks is going to be a winner, but you're looking at your overall basket of stocks, your wealth, and you're trying to grow that wealth over time. So you're trying to grow it over a period of years, and there's going to be ups and downs, and the market is going to have, I call it the Wall Street fashion show. Certain stocks, certain industries, certain sectors are going to be in style and out of style. Right now, you've got an economic boom. And so the stocks that were beat down in 2020, they're easy to, for especially institutional investors to buy these type of stocks. It's easy to justify why they're buying the stocks, even some of them at these levels. They pay a dividend. You've got this great GDP and growth story for the back half of 2021. And it's very bullish. Now you think of interest rates, when they go up, it impacts stocks, especially high PE type names, and the more speculative, the worse it is. And so you're seeing, the SPACs and specs sell off. But also, you have to remember that part of the reason, I said there was two reasons earlier. The other reason is that retail investor, the hype for retail has really slowed down. Some of that has to do with cryptocurrency. A lot of people are taking their money out of the stock market and they're putting it into crypto assets. And then some people just are frustrated because they went all in and built a spec portfolio and they got hammered and they basically threw in the towel. And that happens. Unfortunately, it's a cycle where you get retail investors, they get excited. The market's euphoric. They jump in at the high. The market goes down. They get mad. They sell at the lows and basically take their ball and go home, and they don't come back. And I've seen it over and over again. And I know some of you, I'm going to be saying that and you're going to hear it and it's going to annoy you and it's going to strike a nerve. I'm not trying to strike your nerve. I'm trying to tell you straight up facts, guys. That's just the way it is. Now, if you have a longer, term approach, you're not looking at your portfolio every 5 minutes or even every day and going, oh, geez, the NASDAQ's down 1.5 and I'm down 1.7% because I have high beta. You're thinking about this in years and you're thinking about it in quarters and years. We've got earnings coming up and this is earnings season. It's starting this week. In the next 4 weeks, the majority of the publicly traded companies in the United States are going to report earnings, and the proof's going to be in the pudding. So the quality names that blow out earnings, those stocks are going to go higher. Expectations are high. If they miss earnings, the stocks are going to get hammered. And right now, there's easily a bullish backdrop for why assets could go higher, equities could go higher. My call was 4,200 in the S&P for the end of 2021. We already basically hit that. So, I think you could go up another 5 or 10% from now between the end of the year, but it probably won't be in a straight line. And not every stock's going to go up. So as you're seeing now, last week we're at all-time highs, and you might look at your portfolio and say, well, I'm not even close to my all-time high. Well, that probably means you have a lot of high beta, which isn't bad if you're a young investor, but you need to understand that you have a different risk tolerance and that you have a different beta in your portfolio. And as long as you're okay with that and aligns with your goals, your suitability, your risk tolerance, and you can sleep well at night and you understand that, then you're fine. But at the end of the day, if you're not comfortable, and I've said this before, you need to address your portfolio so that you're not losing sleep and stressing out about it. So, hopefully this video helps some, just hearing it from somebody that's been doing it for a long time. I have 100% conviction in my portfolio as a team. I call it a team. I know that in my portfolio, I'm gonna have some stocks that are gonna grossly outperform. I'm gonna have some that basically don't do as good as I expect. And I'm gonna have some that probably just straight up fail, that don't end up being winners that I thought would be winners, especially in my spec basket. But if I'm investing 10% of my wealth into spec and I'm doing it the right way and I'm diversified and I've got lots of eggs in that basket, that basket's still going to outperform the rest of my portfolio most of the time, especially when you think over a couple year period. So this is going to be harder. It's not going to be as easy for us to get these massive returns. We've had massive returns over the last 5 to 10 years. I think it's going to become more of a stock picker's market. And you also just have to be careful about when you chase hype. I think a lot of people now are chasing these value names. And, I question if that's the right move. The value names, those are names that you bought, before 2021. And in my opinion, you're trimming some of those and you're buying some of this beat down growth that I think is gonna be worth a lot more. You think of like a Snowflake, you think of, even if you look at like names like CrowdStrike and Datadog, the higher quality, higher beta names in the SaaS bucket, those stocks have actually rallied pretty hard from where the lows were. You could have gotten CrowdStrike around 175, give or take, don't quote me on that, back over 200. Datadog has made a nice run from its bottom, and it could have volatility. It could go back, it can go lower, but that those companies are continuing to grow, that they're taking market share. I'll tell you one last thing before I close up. So I've said this to my Discord community. I think last week on a live stream, I do live streams Monday, Wednesdays, and Fridays. And if you're interested in that, check out Patreon. But anyways, I've got a buddy. So if you don't know my background, I used to sell SaaS software, and I basically retired last year. I'm doing this essentially full time, it's kind of a hobby, but I'm also just enjoying life. I've got some young kids. I'm spending more time with them. I'm doing more trading, things like that. And I'm doing just fine. I'm still making decent money. I'm having fun, and I'm completely my own boss at this point. Maybe I'll get bored. Maybe I'll go back to work. Who knows? But right now, this is my focus. I've had fun with it. The Discord community, we've put a lot of work into that Discord and making it, I think a really great platform. And people all, often that they ask, what is Fired Up Wealth about? For me, it's a lifestyle. It's, trying to outperform the market, trying to achieve financial independence and try to enjoy your life and not work until you're basically ready to die, So that's really what it's about. And it comes down to stock market investing, but also personal finance, travel. There's a lot of things that I'd love to do with this channel. In fact, I was brainstorming today of what I should do a next video on. And I considered actually making a video on my next trip, because I think a lot of you probably are just craving, some kind of trip, a vacation, a holiday to get away, think of like a tropical beach or a trip to Europe or what have you. So, I want to keep experimenting with the channel. I, want feedback from you as the community of what you think we should do next with the channel, but I want to keep it open. But at the end of the day, this channel is about, growing wealth and achieving financial independence, which is a pretty broad topic. We've focused a lot on stocks and on, growth stocks, simply because those stocks are the stocks that get attention on YouTube. But if you really dissect the channel, there's a whole series on DGI stocks, 60 stocks for the next decade. There's tons of videos on ETFs. There's videos on portfolio management and actually buying blue chip and having that diversity, on barbell, not having all your eggs into technology or into speculative, et cetera. So the ones that watch the videos that truly follow, I think that they realize that there's, we're adding a lot of value, and I'm trying to help investors, because I've already gone through what you're going through. If you're a young investor and you're trying to build a portfolio and you don't know where to look, you either hire somebody to manage your money for you, or if you're doing it yourself, you try to enable yourself with as much knowledge as you possibly can to be successful. And I try to help bring that knowledge to you. At the end of the day, you've got to make the decision that's best for you, for your portfolio, for your risk tolerance, your goals, all those different things. And I hope that you're doing that. And I hope that you're learning as we go, as we go through this together, as this journey together, that, you can't just have all of your assets in one, sector or one, bucket, because a lot of times it's just not easy to sleep at night, and the psychology starts getting to your head. And that's another thing I like to talk about, is the psychology of investing. So I literally started telling a story and then went on a tangent for 3 minutes there. So I started the story by saying I have a friend who's in SaaS, who sells SaaS. And then I went on a tangent about my background and the channel, all this stuff. So I have a friend who works in SaaS. We used to work together. He sells software as a service, right? It doesn't even matter to the company, but he's in that industry. Okay. I had a call with him earlier last week. So 3-4 days ago, I talked to him, and his name is John. I won't say his last name. His name's John. John told me that essentially he has hit his quota for the year for 2021 in the first quarter of 2021. So he's literally destroying his numbers. He has clients calling him up basically saying, I need to buy something now. So what does that mean? Well, I talk about SaaS a lot on the channel, and I'm still very bullish in SaaS. I think we're in inning number 3 out of 9 innings. I think there's a lot of room to go with some of these stocks. I think, stocks like CrowdStrike, Snowflake, Datadog, these type of stocks still can make me as an investor a lot of money, in my opinion. I'm not a financial advisor. Anything I tell you on this video is just my opinion. But I have conviction that those stocks should make me a lot of money. And when I have not just John, but other friends that work in SaaS, and we have people in our Discord community that work for many different companies, really exciting companies, and companies, that you probably have money invested in. And, they can't tell us anything that's not public knowledge, but basically just saying, here's something that just came out on our website or our blog, things that you don't normally catch on your own if you're not constantly following. But when you have friends telling you that they're blowing their numbers out of the water individually, just with their sales and commissions, that there's good things coming down the pipeline. And I've said this too to the community, the Discord community. When you think of SaaS, the fuel, it dumped gasoline on the fire with the whole pandemic. But with that said, there's a lot of companies that hadn't adopted cloud, that were still on-prem or still in some kind of weak hybrid type system. And these companies now, it's their focus because they know that this could happen again. And they've come to the realization that, wow, we need to be a little bit more agile and we need to actually go to the cloud. And I've talked about this in numerous videos, but in case this is the first time listening to the channel, there's a Snowflake video on the channel that talks about the CFO. And he's talking about how, we're basically saying the same thing. We're in the beginning stages and that everybody eventually is going to go to cloud. It's not a matter of if, it's a matter of when. And I think that a lot of people are taking the misconception that once the pandemic kind of subsides and that, basically people go back to work, that a lot of the cloud names get thrown in that work from home bucket. But those stocks actually, I think, could do even better in some capacity. Some names could do even better because if you have any focus on state and local government, most of them were not spending a lot of energy and effort on, changing their infrastructure during the pandemic. They were just in survival mode. And now they're coming out for air. The first thing the CIO is, going to do, their first agenda is going to be, let's get this cloud thing going with our organization. So, it's not every company, of course, and it depends on the business. If you're in restaurant, you had to be agile and you had to adapt faster. But if you think broader, you just think of the big picture. There are a lot of businesses that were just in survival mode. This is not going away. And I think that you're going to continue to see earnings do well. And maybe it won't be this quarter or next quarter, but I'm confident that even by the end of the year and next year, you're going to keep seeing. I think this quarter for a lot of these names will be good, but I think there's also risk. You think of certain names like a Splunk or an Alteryx, where they have more of that on-prem model. Those are going to be a little bit higher risk than the ones that are just pure, cloud, like a CrowdStrike, et cetera. So I have confidence that those companies are going to do well, even if they, for some reason, have high expectations and have a quarter's miss. I still have confidence that, a year, 2 years, 3 years, they're going to continue to grow, right? So anyways, I just wanted to circle back and finish that statement before I went on. Please check out Patreon, check out Facebook, Twitter, all the different platforms, Instagram. I'm trying to build those other platforms. At the end of the day, though, YouTube is where I continue to do these free videos. And if you want to be part of the community and you like, what we're covering on this channel, consider joining Discord and the Patreon community. We've got a masterclass series in there that I think will blow your mind. The quality, we've got 8 hours of content. I'm releasing another video this week. It's going to be a deep dive on financial statements. We've already done the balance sheet in the masterclass. That was masterclass 7. Masterclass 9, we're going to do a deep dive at the income statement and the cash flow statement. So it's really teaching everything that I've learned over the years investing and trying to enable you with all that information so you can make your own investing decisions, teaching you how to fish, giving you all the ammunition, all the tools in your tool belt to go and be successful yourself, from technical analysis to fundamentals, qualitative and quantitative analysis, just to everything in between. We'll be doing some options later on, but definitely check it out. The community is, I think, doing great through all this turbulence. Some portfolios are impacted more than others, but we've been saying over and over again that, this is going to happen. There's going to be, this rotation basically from the work from home to the, to the reopen type trade. And I think the majority of the community was very well prepared for that. Maybe, if they weren't as prepared as they wish they would have been, at least they felt like they had the information in their brain that they knew it was coming. You know what I'm saying? So anyways, guys, just keeping it real today. Some straight talk. Hope you enjoy. Please subscribe if you have not subscribed to the channel. I hope you have a great rest of your day.
Take care.